Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analysis Update for the 8th of August 2011. Hi guys, just want to let you know that Nikki and I don't have Metastock feed this morning for some strange reason, so we're going to have to address that today. So I'm going to be doing the analysis using another piece of software that I use. So please be patient. A lot of it will look foreign to you. All these blue and red lines over here are daily support and resistance, and the daily pivots in black. So you can see all the support levels in blue, the dots and the dashes up here in red, and the black are all daily supports and resistance for these particular days. And then you can see down here I've got my 2 or 3 particular indicators I'm using today. Well, for this particular outlook on the market. We've got MACD, relative strength, and then we have the CCR indicator. Okay, so just want to look at the daily particular. You can see that price action has actually seen steady growth since the close on Friday. We've seen the markets, primarily the euro, sterling, and that rising this morning on Asian trading times going into European session opens. You can see it's bounced on a prior moving average here, and you can see that price is trading at a daily resistance on R1. So that the blue line over here, for example, is the daily pivot level. Those of you who are aware of pivots, and you can see the next one is our first resistance 1 on a daily time frame. So price is trading right at that level as we speak. So ideally on a daily chart we like to see price trading above that, finding a bit of support and a push higher, and ideally our next resistance level or target level be R2 and ultimately R3. That's how it works. Okay, so be aware of it. Looking at price action at the moment now, you can see that MACD has been in a bearish, but we're looking at possibly crossing the zero line as we speak. Relative strength has been gaining strength as mentioned. As price has gone up, you can see that we're seeing RSI. RSI is trading at 56 at the moment now, so well above the 50 mark, indicating bullishness. However, my CC is looking a bit flat. Now this is daily. The CCR indicator looks for convergence divergence. When price is moving up, you want to see CCR doing total opposite to indicate a slowdown or convergence or divergence in price action. So you can see that price, the CCR in particular, is going slightly sideways as price has gone up. So it's indicating a possible slowdown. But then again, you can see the price is inching higher to a prior resistance level that we saw just recently on that huge sell-off. So, if we look at our intraday charts, let's have a look at a 4-hour in particular. There we go. You can see price action, higher swings as price has been going to the upside, and sure enough, posting higher highs. Now you notice that as we speak, we've had a push higher, and you can see that price is now traded higher than R1. Price needs to obviously close at this level here to indicate that we're going to see higher moves to the upside. Failure to see that won't see us actually attempting the daily R2 level, which is currently, just above us at roughly the 14,454 mark on the chart for you. Just be aware that relative strength is now overbought, and our CC indicators also at a ceiling level. So ideally what we could see, we want to see the CCR coming through that level to give us an indication of a possible change in market sentiment, and we are in an overbought indicator on our relative strength, and you can see MACD is well above the zero line. Haven't seen a crossover yet. You might want to wait for a crossover, but as price continues to the upside, we're obviously going to see these bars. The moment you start seeing a lower bar than the previous one, so if we get a green bar in the next candle on 4 hour and it's lower than the prior one, we're showing an indication that there's a slowdown and a possibility consolidation. So be aware of that. Look for those when using MACD histograms. That's how they work. So as you can see, in our prices are inching higher. Be aware that today the G7 countries are getting together in Euro to try and work out some sort of plan to try and stem the negativity in Eurozone countries, which is not helping global currencies as it stands now, because a lot of people are wondering if Italy and Spain are going to be able to see their see themselves through this really negative period, and there's word around that there might defaults, etc. like that. So they're going to be definitely trying to work that, trying to come up with a contingency plan there to try and stop that obviously becoming reality, because then it will cause a domino effect globally. And we know that the US dollar at the moment now has been downrated or downgraded by the three major companies out there that look at this credit lending, Standard & Poor's, Moody, and are the two big ones, and they've gone ahead and downgraded the US dollar from a AAA to a AA plus, which is the first time the US dollar has ever been downgraded. So not a good sign. And then because of that, obviously you're going to see a ripple effect occurring, because now the US dollar is going to battle. If they want to get any lending, then they have to pay higher interest rates, etc. like that. There's a huge a lot of other stuff that goes according to the reason why a downgrade is so negative for a particular currency or country in particular. So it's all going to, then you got slowdown in production figures. So we know that there's a noticeable slowdown in the markets in terms of production figures globally. China, we just seen recently, posting a third consecutive negative figure in the production figures, so they know that the largest producer globally is also feeling the strain. So we're starting to see people tighten their belts, less spending, etc. like that, which has led to this slowdown in the markets. As I mentioned, my indicators are showing me a bit of a consolidation. Two of the indicators have surpassed our trading in an area where we should see a consolidation occurring. MACD is telling us that we are in a very in a bullish uptrend, and we are trading above the daily resistance R1. If it can stay above that level, looking intraday, then it bodes well to see price rallying to at least the prior high to start with here, at the high of this candle here. This is bearish candle here that we saw, and ultimately our next target would be the R2 indicator. Notice we are going to see a bit of consolidation at these areas as we move further north. So as you can see, our price is inching higher. I've got a funny feeling it is a knee-jerk reaction. I could be wrong. We are going to see a lot of volatility as the G7 countries thrash out some sort of try and put in place measures to try and stop the problem countries at the moment now, that they, like Italy and Spain, for example, from a possible default. So we are going to see a lot of volatility in the market. We're also going to see a lot of volatility because of what happened in the Asian market. We saw a lot of huge down moves on the shares market, Nikkei index, Hang Seng, etc. They all took between 2.5%, 3%. We saw a 5% drop on the Nikkei, I think it was, in particular, overnight. So this effect now is starting to ripple, and the ripples, depending on how big the first start of that of the thing was, to see how this ripple takes place now. And all we see now is this ripple that's occurring throughout the entire global markets, which is showing us these sell-offs. So keep that in mind. Euro is still upside, but ideally we'd like to see it trading and closing higher than 14.36.8 to see any further progression higher. Indicators are trading in a overbought area, so we could see consolidation taking place. Just keep that in mind looking forward. Next up is the sterling against US dollar. You can see that price action is trading at the upper end, lower wick, small trading range. However, extending higher, we were testing. You can see the price is testing I think it's an R1 level as we speak. Yeah, the daily R1 level as we speak. So price as per the euro against US dollar pair needs to be trading higher than that to see any further extensions to at least the daily R2 level that we're seeing here. If you look at the indicators below, you can see that my CCI indicator and my relative strength indicator is showing a bit of a divergence. You can see that price has been inching higher, but I'm starting to get a slowdown, and my charts are showing me lower highs in the RSI as price has been headbutting this consolidation range, which comes in ties with the previous swing. We saw a lot of sideways motion before we saw the sell-off in the market. So price is also, as it's starting to inch slightly higher, you can see that the relative strength index is pointing down. MACD is also showing us a consolidation on the upper end. We are seeing price moving slightly higher. However, price, you can see the MACD reading now is possibly showing us an overbought. So we could see consolidation at this level here, and it's trading at the up end of the Bollinger Bands on this particular time frame, the daily. So we could also seeing a bit of a slowdown occurring now in the market. For this particular pair, let's have a look at the 4 hour, for example. There we go. You can see price action at the low end of the wick. Asian market trading has seen price trading slightly higher, but the D resistance 1 level is in play as we speak. Relative strength and our CCI indicator is overbought. If we see CCI breaking lower than the 100, then we're looking at a possible shorting opportunity arising. Relative strength is in an overbought, trading above the 70 mark. MACD, however, is still looking, this candle, this bar that's in play now is still higher than the previous one, so it's dictating that price is still moving higher. The moment you start seeing the next bar trading slightly lower, we could see price trading to the downside. Ideally, we want to see price trading above the prior high. In this case here, you can see the pullback. Price needs to be trading above the prior high here of this candle here, so roughly around the 16,480 mark would be ideal for further extensions higher. So the next 4 hour candle histogram, we see it trading slightly lower and RSI coming through the 70 and CCI dropping below, then we could be looking for potential consolidation to the downside. We are seeing higher swings, which dictates higher, but candle action as we speak now is at the low end of the candle range, so we could be possibly looking at consolidation occurring. Next up is the US dollar against the Swiss franc. Let's look at the daily. You can see the negativity that we see in price action since May of last year. We saw an ultimate high roughly around just above the 1100 mark, and then we've seen price action it's just started to fall ever since. Notice the MACD is well extended to the downside. Relative strength has been trading below the 30 mark for quite some time now. Notice the CCI though. Notice where the previous one, and you can see the CCI is now confirming a possibility of a change of market sentiment. Strange as it might seem though, the US dollar is negative, but you can see that price action the past couple of days, we've seen a lot of support in this area here, and the US dollar has, funny enough, gained a bit of upside movements as the market has been falling. Very negative previous day, and you can see price action now happening at the top end of the wick as the Asian market trading has been low end. So we've tested the bottom of the low of this candle here, and then we've seen a bounce at the upside. The resistance, relative strength, is well oversold, and so is the CCI indicator. MACD, notice these blocks are moving inwards, showing that slowdown is occurring on MACD, and we can see that the histogram is slightly still extended negative, Don't get me wrong, we could still see price still moving to the downside. Ideally, we want to see MACD crossing over, or the zero line in particular, and we need to see a cross of the two lines at the bottom as well to give us an indication of a possible buying opportunity. But as long as we see the US dollar still looking negative, it's just been downgraded, we're obviously going to see everybody rushing towards the US to the Swiss franc as a safe haven currency. However, this is also a huge issue for the Swiss government, because a stronger franc in a very bearish eurozone does not bode well for the economy overall. So GDP figures, etc., will take a bit of a knock, and they will try and do anything to try and stem that. So we could see intervention. We've seen monetary easing, quantitative easing in a sense happening, both in the Japanese as well as the talk about the Swiss franc. So we could see another round of that. G7 countries are sitting down today and are going to be working out some sort of deal. So we could see volatility in the market. Let's have a look at the intraday time frame, 4 hour in particular. Okay, so where are we now? Well, you can see that daily pivot is above us, so we know we are still looking negative until we're trading above that. But you can see that we've seen a bounce on a prior low that we saw 3 days ago. Price is trading slightly higher. Notice MACD is also in a negative, but we've seen a crossover. Relative strength is oversold, and the CCI indicator is also in a negative or an oversold area. So we need to see, obviously, price. This is going to be bullish. Then we want to see price obviously breaking previous support to the upside. You can see that the prior support was pretty much up here at one stage, and now we're seeing a reattempt of the prior support level. So we can look at possibly this prior support area here at around about the 7.6 mark as an area where we would like to see price trading above to give us that indication of further upside movement. But ideally, we don't want to be trading with the daily pivot to look for any further progression high. You notice here before the prior day, we didn't see price trading above that daily pivot, and so there was a major resistance, and we saw price fall to the downside. It has to be trading with a daily pivot to even think about looking for possibly long or an opportunity for long progression to the upside. So until it's doing that, then we should be looking for further consolidation and possible moves to the downside. Last pair of the day is US dollar Japanese yen. You can see the intervention or monetary easing that came in not so long ago, and it helped nothing for price. This is a daily chart. Excuse all the these blue and red lines. These are my daily pivots for price action on that particular day. You can see that we saw a crossover just prior to that huge up move, and then our indicators went bullish, and we saw this massive gap higher. This is where the Japanese government intervened, or they came up with monetary easing policy and put policies in play, and we saw a huge up candle due to that. So we saw the US dollar gain a bit of strength, but however, with the bad news that came out on Friday with the downgrade in the US market from a AAA status to a AA plus, we saw a price reversion to the downside. We've seen it before. Not so long ago, excuse me, where we saw price really rallying just prior to the earthquake and tsunami in Japan. It didn't stack up, and we saw price reverting back to this level here again, and we're seeing exactly the same thing here again. So you can see the price is trading below the 80, which will happen to be a long-term support and resistance level for this pair, and you can see price is looking once again bearish. The MACD's above positive, however our two other ones are showing a different set of the indicators are looking different on the chart, so they don't add up. And if you look at our intraday, you can see the move after the monetary easing policy they put into play, and you can see prices revert to the downside. And with anything, as long as you're seeing lower swings, it's depicting a market direction. Both the MACD and both our other indicators are in a bearish move at the moment now, and until such time as we see price trading posting higher highs, then we should be looking. Then we'll still be looking for further downside movers. You can see the daily pivot is still above us, so depicting a negative trend is in play. So we should be looking for possible further shorting opportunities. As I mentioned, the G7 countries are in talks today, so we can see a lot of volatility in the market, I presume. So if anything, if you aren't in any trades today, I'd ask you not to trade. If you are trading, please be aware of the volatility out there at the moment, because there's going to be a lot of it due to this huge downgrade from the US, as well as the negativity that's coming out of the Eurozone, which is going to be playing a major factor on the volatility we're seeing in the currency markets as we speak. So be aware that you aren't in any trades. I doubt it. Rather see what the outcome is on the G7 talks today to give us an indication of what price action is likely to do for the remainder of the week, and then we could trade that. It's far better just to give one day back to the market, so we can get a definite, clear indication of what price is likely to do before we actually get involved. It's pointless trying to trade this volatility if you don't know what's really is what's causing that particular move or that volatility in the market. It's far better to give that back to the market. You don't want to be trading. You don't want to be chasing trades all day. That's the last thing you want to do as a trader. So you might be saying, well, it's good opportunities to capitalize on all this volatility. Yes, if you know what you're doing. If you don't know what you're doing, you're just trading blind, then it's a good case for you to actually have your actual accounts cleared out. With all the volatility today, if you don't know what you're doing, you could actually see you counter trading as counterproductive, and you won't be making any gains in the market. So please, if you aren't in trades today, please stand aside. Let the markets or show us their hand as to what the G7 countries have come up with in terms of policies to try and stem this negativity that we're seeing, especially in Eurozone. So rather give it one day. It'll save you one day, but long term you'll be able to be productive in getting back more from the market. So that's it for today. Apologize for the charts. I'm going to show we'll have our Metastock up and running before not too long. There we have all our strategy templates, which will better give us an indication of what's likely to occur. But just looking at price action here, we're still looking very, very negative at the moment now, and we're going to see a volatility occurring as we see more news coming out of the US as well as Eurozone for the remainder of the week. So if you are trading, please trade very, very cautiously, tight stops, and stick to your money management rules, please, guys. That's it for me. Hope you have a fantastic trading day, and look forward to seeing you guys tomorrow with our Metastock charts open and ready to go again. Take care and trade serenely.